Hey Rav, it's good to have you back on the podcast for another episode.
Thanks for having me, Peter.
No, all good, all good. I liked what we spoke about last time, and I'm glad that we could catch up again this time and talk a little bit more building. I've got heaps more questions, mainly about sort of the building side. Yeah, you're talking about the different types of builders out there. And I sort of cut you off because I wanted to sort of capture what you were saying. But you were saying, they'll say there's some sort of spec builds versus you more custom build. What's the difference between the two?
Yeah, so spec builders, the builder is looking to or the developer is looking to develop, build and sell to the market. They don't have a client initially. So it's like speculative, like they're trying to work out what the market wants.
Well, yeah.
Whereas, say for usually a custom home builder, we're dealing with a client that is looking to build their home, and it's a specific block of land with their specific needs or wants. So a little bit different, but yeah. So that's where I kind of started off. At the beginning, working for my uncles, they were doing a lot of spec building, subdividing of land. And I guess the difference for them was they're really subject to whatever the market was doing. So if the market went up when they were purchasing the land and they were building and that sort of thing, and then dipped right before they were going to sell, they would have to hold on to that land or hold on to that development. Most of the time it worked in their favor or has worked in their favor, but what you find is, like, say for example, if there's like a GFC or something like that, it's they really struggle then, especially because they normally have multiple projects going on at a time. They kind of need to finish one project before they start moving into the next project, and they're usually progressively bigger as well.
Yeah. And you didn't want to do that. You sort of wanted to focus more on the custom build, mainly owner. I've spoken to a few of your customers, and it's mainly owner occupiers these guys do. No one's really doing a custom investment build, are they?
Nah, it's fairly rare, especially within Sydney. So we only build within Sydney.
Yeah. So
it's fairly rare. There are a few people trying to do like a dual key sort of thing.
Okay, yeah.
Or like a attached granny flat. But most of them that are looking to invest, they're usually picking something regional.
Are people getting granny flats for the income, or are they getting granny flats for like family members?
Bit of both. Like a really common thing to do is like most of the people that are asking for a build, their layout is usually 3-4 bedrooms upstairs, 5 bedrooms upstairs, and there's always usually a bedroom downstairs, and that bedroom usually is like a guest bedroom with full ensuite, like a robe and that sort of thing, and that's usually for either guests or maybe their folks that are coming to visit.
Yeah.
But some people do have the actual full granny flat thing, where maybe their folks can stay or their guests can stay.
Okay.
They've got a bit of privacy. Most of the people that are building, hoping to build that granny flat thing, though, it does look like they're trying to do some sort of income.
Maybe get some income.
It's fairly expensive to build. Just living expenses are really high.
And in Sydney,
in Sydney as well. So it's usually for that reason.
I get it. You get a bit of income to offset, your dream home. Because a lot of these guys are building. I mean, when you're building a custom owner occupied build, you're expecting to be there for a while, right? It's not like a 2-3 year type of living situation. Yeah. And so I can understand some people have maybe a granny flat or a what do they call it? A self-sustaining, room or something like that.
Yeah.
Just to sort of offset income. I know there was a bit of a trend for a while. I don't know if it's still the case, where people would get international students coming and living in granny flats, especially if you lived sort of around like maybe closer to the city or like Macquarie University area or something like that. And that could really help offset some of the costs of having, quite a large mortgage.
Yeah.
Yeah. Have you seen that sort of trend, or is it mainly just family and maybe a tenant or something, like a long-term tenant?
Interestingly, not. The uni thing, I haven't seen much of it. There are a few people that are trying to do some sort of co-living sort of thing, manor housing sort of thing. But not like we've had some people contact us from like Kensington, which is really close to UNSW.
Yeah.
But even them, they're just looking to own and occupy it.
Yeah.
So
there's another trend I wanted to ask you about and see if you do this, because like you mentioned that investment properties, usually people when they buy investment properties, they want to buy something pretty simple, sometimes dual occupancy, earn a bit of income. You mentioned regional, which is pretty popular at the moment. And that's what they're looking for investment. It's nothing, they don't want to sort of make it too flashy. No one wants to spend too much money or overcapitalize on an investment. It's just a numbers game. However, the exception to that is Airbnbs, where to make a nice Airbnb, they want to buy, maybe spend a little bit extra. Are people building Airbnbs, or is it, is that market more of an established property market?
We haven't received any requests to do any Airbnbs. I would assume they're probably like closer to like acreage areas or closer to the water or that sort of thing. Maybe in the mountains, probably a more scenic sort of environment. Most of our builds are in like the highly urban sort of areas.
Well, it's funny though, because I have a client who built a property ages ago. He built a property in Kellyville. Yeah. And Kellyville really maybe offers schools and more of a family life. But he Airbnbs the Kellyville property. I don't know who's Airbnb-ing it, but I found that was an interesting sort of proposition that he's got a Kellyville property. It's not near the beach. It's not near really. Maybe it's near Rouse Hill Shopping Centre. Maybe. Yeah.
Actually, now that you mention it, like I do recall there was a place in Rouse Hill, and I used to see people. There was a high turnover, so I assumed they were doing Airbnb there. I'm not really sure.
Interesting.
It's like I'm not sure.
Are people having holidays in Kellyville?
Yeah. Who's Airbnb in those places?
Yeah.
But, that is interesting. But no, I haven't had any requests for that.
It's cheaper than it'll be cheaper than the Gold Coast. So maybe I've got to consider taking my family to Kellyville for a holiday. There's something happening in Kellyville. Anyway, I think a lot of people, when it comes to building a home, and like I mentioned, I've had a chat to some of your clients at the early stages of building. Now, early stages of building could mean anything. Could mean they're just planning. Could mean they're getting their finance arranged. Yeah. I'm going to put you on the spot, but I've got a block of land in theory. A block of land, I've purchased it, it's settled. Now I'm looking to build a property. What is the step-by-step process for someone looking to build? Never done it before.
There's a lot of variations, but the first step is capacity. It's just checking the capacity of like how much you're looking to expend. So Keaton, a lot of our clients probably 50-50 share. Some are completely cash client, and then the other half they need finance. But they need to do that check, and I guess the issue would be if they're not wanting to overcapitalize as well, and they're not wanting to undercapitalize, but they need to do that check. Otherwise, they're going to lose a lot of time and money going through the process, because the next step, depending on, there's so many variables. It depends.
I know there's, yeah.
So if they have a, so you're saying you have a block of land. So the next step would be to design a home for that, specifically for that block of land.
Yeah.
But the initial stage, again, you need to have that capacity all sorted out. So we are not over designing or under designing.
So basically, we get the borrowing capacity if we need finance, or if we don't need finance, we just get a budget, right? What's our budget for the build? Then when we go to the design stage, I assume that's like a consultative process where I'm sort of saying, hey, this is my budget. What can you design? This is my budget and this is what I want. What would be the design that fits what I want in my budget? And I guess, you know, you have to shave some things off if you don't have the budget for it, or you can add things on if you have more budget, that type of thing. Is that sort of how that process works?
Yeah. So if you have a block of land already, so it'd be us checking your capacity, or sharing your capacity with us, and then us going through the design phase, and then we're reverse engineering based off your capacity. So say, for example, if you say, got $1 million, we would reverse engineer that $1 million back down to a design. This is what you can build for $1 million based on what you've shared with us. And then, you know, usually we have a dream session during that time where you're sharing what you're hoping to achieve within your build. And then we're doing our best to try and marry those two together.
Yeah.
And then the next stage is from custom builder, or even for a volume builder, it's pretty much the same. You're going through, you're trying to get your permits done, you're trying to do your selections. For ourselves, we'll try and have permits and selections happening at the same time, because the hope is that once you come out of the permit stage, which is council stage or private certifier stage, your selections are all complete. We can finalize all your plans and we can go to site. So pretty much just capacity.
That stage, sorry, I was about to say that stage. I think that's where a lot of people don't know that process. So we've got the borrowing power, then we do the design, and then we do selections. You're talking about like materials and colors and things like that. But then also the council. What's the process of the council? What's that process?
There's just a whole bunch of reports. So it depends. So there's two different types of permits. There's CDC, which is compliant development, which means you don't need to go through council. You can go through a private certifier. And then there is council, which is DA. You need to submit a DA.
And I assume that the cost is different.
The cost is different, and the time is different. You know, it's usually a little bit trickier, a little bit more time consuming to go through council. The difference is with CDC is you pretty much need to get like 100% compliance. So if they're asking for a certain setback, there's no negotiating.
Just goes to DA after that, if that's
so if you want anything outside of that sort of thing, you have to go to DA. There are a few other things if you're flood affected, if you have trees, all this sort of thing as well. But yeah, so it's basically just that whole initial stage, especially if you're doing DA. Council's just checking to see if you're going to affect the environment, those around you, the greater community, that sort of thing. They're not necessarily checking for if you're building to code or anything like that.
I know it's different from different councils, but what's the rough time frame between CDC and I know you're going to shake your head and be like, I can't give a time frame, but what would be the average if a client asked you what's the average time frame for a Sydney some council within the Sydney greater area? What are we seeing at the moment?
I'd say probably from the time you have your initial designs completed, you still probably need to allow like 6 months until you can site start minimum. Some of the councils,
and that's with DA.
That's with DA. Yeah. When you're going like with private certifier, the quickest you could probably do is maybe like 3 months, something like that. So it's a significant difference. Most people are probably doing 4 to 5 months going with CDC. But yeah, with council, it can be a year. Like it's there's not really anything you can do to. Yeah.
It's important to know that too, because I mean, from a finance perspective, and I mean personal finance, not like a mortgage necessarily, but from a finance perspective, if you purchased a block of land and you're paying principal and interest or interest only repayments on that, and then you're waiting a year, and you're renting because you're waiting for the property to be built to move in, you need to factor in all those costs, right? To make sure that you don't run out of money during the build stage, like personal cash flow.
Yeah. Sometimes they have change of circumstances as well. Hey, Keaton, like you'd know better than myself. Like, they need to be working in a certain place for a certain amount of time, something like that. Yeah, Keaton.
Yeah. And the approvals only last 90 days, and so people get a pre-approval, and then after 90 days is up, it's we're back to the drawing board, because policies change, rates change, circumstances change. So you have to always sort of constantly be on top of that finance side to make sure that your dream build is achievable. So anyway, the next stage, So we got the certification, either DA or CDC. During that time frame, you're doing like selections and stuff like that. And then what's after that?
They're pretty much just final finance, construction plans. So we'll often receive plans from someone else. So it might be a building designer, an architect, someone's come with drawings. We also design and build, but many of our clients have some plans already. And for ourselves, for my own certainty, I like to have our plans redrawn for construction. So most of those plans that are drawn for approvals. So they're great for approvals, but not really practical on site, or there's not enough dimensions in there for the people on site to actually build those homes.
Explain that to me, because that's the first time I've heard that. So so you redraw the plans for the people on site. What's the difference between the two plans?
It's usually so the initial plans, it's just like, it's a design that is good for council or good for a private certifier. Those people are not looking at, say, for example, if a window is centered into a room, or if there's enough room for architrave going around the door. Or, they're not really looking at like heights or anything like that. Or say, for example, it might be there's molding. Say if it's a French provincial home, there's molding that's going around the home. Those plans, like council doesn't need to know what height that molding is going to be, or where all the lines that they've got, these decorative lines, ashlar lines going around the house. They don't need to know what the spacing is for that sort of thing. The guys on site need to know that. It needs to be all pre-planned prior to them starting. It might be like, say, for example, a slab plan. Slab plan shows where each recessed area is, so where all the wet areas are and where all the plumbing is. But that's not required by council or even a private certifier for CDC. So often those things are not within that drawing pack. And there are people that are trying to use those plans to build on site. I think it's fairly risky though.
So there's a lot of guesswork, I assume.
There's a lot of guesswork, a lot of trades going to site not knowing, like not having the dimensions. To work out what's happening on site. Even something as small as not having windows centered and stuff like that. It might sound silly, us having a chat about this whole thing, like, it's not a big deal, or like it doesn't sound like it would be that significant. But on site, if you have a void and the window's off center, so it can be a real eyesore. You can even have like various heights in doors and windows and that sort of thing. So say, for example, with a high ceiling home, you might have all your windows, all your doors at 2.4 high. And then, we've received plans and you have like the windows still set at the standard height, which is 2.1 high. So walking through that house, you'd have architrave all at different heights.
Yeah, gosh.
That's
The aesthetic is off.
yeah.
Yeah,
That level of those details are not required for council approval. Or
yeah. Okay. All right.
private certifier or.
And so, is it common? Is it common for builders to go off the drawings that were submitted to council and just guess their way through it?
Yeah, unfortunately.
Yeah. Okay. To be honest, that no. It explains a lot, because there's a lot of people who are disenfranchised by their builders after a build's complete, and there's a lot of people that have issues with how the building ends up. And I've always thought that question is, how are the builders? I always sort of put it to, they're cutting corners. I was like, oh, they must be dodgy, cutting corners or something like this. But it happens so often. I was like, well, maybe that's just what happens. Maybe everyone's cutting corners. But if there's a lot of guesswork because they haven't actually been given dimensions and they haven't actually been given, all the details of what they should be constructing, and I can understand that would happen quite a bit.
Yeah.
No, that makes perfect sense. Because it's always been a question in my mind how that occurs so often for a lot of people. It can be very frustrating. So you basically want to make sure that for your customers, your drawings and specifications are very clear to the people on site, and so there's no guesswork, and everyone knows what they're doing.
Yeah,
that's brilliant. No, I like that. I like that. Okay, and then after that, I would say that you just construction starts and you progress payments and
construction starts. So we have we've got the progress payment stages, and we bring in the client out to site. So our clients usually visit site every week or every fortnight when they're available. And we're also doing the video updates weekly as well for our clients. They do have actually a camera on site where they can log in and have a look at their home as well. I
love that idea too.
Yeah. So and it's good, the clients. It can increase the duration of the build because we're doing that, because we're bringing a client in and we're checking with them. Is this what you were hoping to achieve in this particular room? Say it might be a home theater room or something, and they're like, I've just realized I haven't allowed for acoustics or a sound system or that sort of thing, or this room is really close to another room, or and probably should put some acoustic insulation in this room, or could be even cabinetry design. Maybe they want to change something. So there's a few things that can happen on site, and then that ends up increasing our overall build time. So it's an unfair comparison. If somebody says, how long did it take for you to build? And it's like somebody has built within 7 months, someone's built within 8 months. The difference is person that has built in 8 months has been able to visit the home and has made changes, so they're happy with the home at handover day. Whereas the person who's building in the 7 months, they've just pretty much followed plans and followed selections lists, not asked the client any questions, and then client's not so happy at handover day. So
people do compare the strangest things, I find. Like I think there's this, and it's a human trait. I don't think it's any particular type of person. We all do it, where you chat to a friend and you sort of flex. I did my build in this time. I got this interest rate. Our builder put this in there. We got this, so we got it at an ultra cheap price. I think people love to flex how cheap they got things as well. And I find it really, it can be a bit damaging to like the psyche of a customer, because they get a bunch of conflicting information, and even if they don't want to admit it, you start comparing yourself to your peers, and you think, well, hold up, my builder's taking longer than Johnny's builder down the road. Why is that? Maybe I'm getting ripped off, and I'm paying more for my builder, and and all this type of thing.
Yeah.
I find that happens so often, and people forget why they chose their builder, or why they chose the decisions that they made at a particular time, and they get into this sort of world of comparisons, and it sort of sets them back and probably makes them unsatisfied with the process. Anyway, I do it, like I said, I do it too. I do it too when someone says, we do it for little things too. Someone buys a car and you sort of go, oh, gee, their car's maybe a bit nicer than my car, but my car's good for my family. I can take my kids, and it's super convenient. I love it for that. But then I see someone with a Mercedes, two-door Mercedes, I'm thinking, why can't I get a Mercedes? But I can't take the kids in the Mercedes to all their events. But anyway, you have to remember, I guess, why you're, making certain decisions.
I guess, it's just like what the purpose is, and why you've made that particular decision. So, I guess they do the same in interest, with interest rates and stuff.
All the time. It's crazy. Look, finance is a tough one for that. Hence why I probably went on a little rant there, because money is emotive. You'd know that too, like with construction, it's an emotional thing, money. And so when you're speaking to somebody, and they have a particular interest rate, or they had a particular experience, or their loan comes with a certain benefit, or they've structured their loan in a certain way, or we did it split fixed, split variable, we did interest only on this portion and this for tax purposes, or our accountant advised this or that. That's great for them. That's great for them. And that's what you have to remember, is that finance is individual. There's no blanket finance, option that's going to be the best, for every single person. And that's why you have mortgage brokers, is that we've got a best interest duty. And part of that duty is to make inquiries about the personal circumstances of the customer, and make sure we're recommending a product that's suitable for them, not suitable for their friend, or not suitable for their uncle, or not suitable for the people around them. And that can be a frustrating reality for a lot of customers, knowing that what I'm given is maybe a higher interest rate than my friend, but that's because my LVR is higher, or maybe because I'm constructing, whereas my friend purchased isn't constructing and might have access to better rates. Maybe it's a different property, a whole bunch of variables. And you'd see that in construction as well, that there's just a lot of variables. And the last time I spoke to you as well, on this note, you were going through some trends in construction. Is there any trends are you seeing people requesting certain things at the moment? Are there certain popular trends in building at the moment?
Not really. Not that I've seen, other than a lot of people moving away from gas. A lot of people are going electric, throughout their home. I know you're speaking to some people as well, Keaton, about that other thing. They can get a interest rate or something. Is that right?
Yeah. So there's a couple of lenders out there that are sort of energy conscious, or socially conscious, I should say, lenders out there. And it's really good because, like you said, the trend is going to sort of more electric. I think in New South Wales, you need to have a NatHERS rating of 7+ anyway, as part of the standard construction. Correct me if I'm wrong.
You're right. Yeah.
But and so there's these lenders out there that are saying, look, if you've got a NatHERS rating of 7 or 7.5 and higher, we can give you discounted construction rates, compared to what everyone else is paying. And right now, rates are about 5.5%, maybe a little bit more is sort of the standard rate. 5.5 is quite a decent rate. Anything under 5 is fantastic.
Yeah.
Anything under 5.5 is fantastic. At the time of this video, I should say. But there is one particular lender that's actually offering less than 5% if you have a fully electric home, no gas. If your NatHERS rating is 7+, and if you've got solar on your roof. And if you tick all three of them, not just one of the three, if you tick all three of those categories, you can get an under 5% product in today's market, which is crazy. And that's just one of the lenders. Even if you're not ticking all three of those, maybe you've got a bit of gas or something like this, but you're still having a NatHERS rating of 7+, there's still lenders that are discounting those rates. And so when people approach the major banks seeking finance, the major banks aren't going to tell you, that another lender's offering discounted construction rates. And so it's super important to make sure that if you are constructing, that you do consult the right people to make sure that you're getting an affordable construction. And we spoke about earlier about how you have to manage cash flow during that period. So the less you're spending during construction, it's only going to be better for you, in the long run. It's only going to help you further. So, that's sort of what's happening in the market at the moment. And there was talk about them pulling. There was a few lenders that were sort of like pulling that product, or they had it sort of temporarily. And there's been a few announcements that they sort of said, no, we'll keep it going. And and I don't think it's taken advantage of as much as it should be.
Most people are not aware of it, I guess.
People don't know about it. No. That's it. People don't know about it. So, are you doing a lot? If you know those three categories, though, are your builds falling under those three categories, or some of them? I guess it's custom, right? So people have different tastes.
Yeah. I think one of the common things is, people want to cook with gas. People like they're the common ones. Like cooking with gas and gas fireplace, and if those two things are not an issue, usually they're fine. Like they've got solar, and they're happy to use like a heat pump hot water unit, warm up their water and stuff like that throughout their home. But it's just if they're really into cooking and stuff, and they like.
I get it though. I've tried to use those magnetized hot plates. You know what I mean? You plate on it, and then it heats up, and then you take it off, and you can't feel any heat. And I don't know if it just feels different. I don't know if it is actually different.
It tastes different.
Something tastes different. But I like cooking with fire. So but look, it's even if they're not meeting those three. I mean, if you're getting that NatHERS rating, you probably get a discount anyway on your rate. So and some lenders also doing fixed price construction, by the way, which is mainly lenders will do variable rate. Now, in the market, I mean, at the moment, a lot of people are choosing variable because they think rates will go down. But look, there's no way of knowing if rates will continue to go down. There's a lot of things happening in the world at the moment. So don't know if rates might increase again soon or go down. So sometimes people want a fixed rate, not to game the system and not to sort of say, I want a fixed rate because rates are going to increase, I think that's the worst outlook, because then you're just gambling. I think if you are picking rates based on what's suitable for you, like I said before, so for instance, if you're sitting there going, I want a budget and I want to know exactly what I'm paying every single month, regardless of what the interest rate is, I just want to know what I'm paying so that for the next 3-5 years, our family can know our mortgage is X amount. And there's no world global event that's going to come in and sort of say, oh, hold up, interest rates are now increasing, and now, our mortgage has gone up by $300 a month. And so that's a great reason to fix a rate as opposed to trying to figure out, oh, will rates go down, will rates go up, because then it's just speculative. But people can construct on fixed rates. And that's something that a lot of people don't know either. And is if you want that budget, I mean, you still have progress payments. So every progress payment that comes through, your repayment goes up. But if you prefer the budget of saying, look, I know what I'm paying until the next progress payment, then I know what I'm paying until the next progress payment. It's a fixed rate's probably a suitable option. Yeah. So.
Yeah, I did read earlier that City of Sydney, they're apparently abolishing gas. So
really?
So,
oh wow! Okay, so no fire cooking.
No,
they're abolishing gas. That's fascinating.
Yeah,
I wonder. To be honest, I don't know enough about like the environmental impact of gas.
Yeah.
Versus electricity. I know there's probably some experts out there that can correct me, but good on them. It's obviously for environmental purposes, I assume.
I assume so. Yeah.
Yeah, fair enough. Yeah, I think there's a lot of cultures that actually like to cook with fire, if you know what I mean. Like have that. I think that's probably a part of the reason why a lot of people
get the portable burners out.
That's it. Yeah, get the portable burners. We've got one. I get that. It's probably safer, would it not be? There's a lot of issues with gas in homes, so maybe it's a safer option to get some electric. What are the options for electric? Because it's mainly water heating and cooking, right? That's
they're usually the two. Maybe and like heating, like if they have a fireplace or they have electric heating.
Oh, okay, gotcha.
But so usually just the water heating. The initial cost to get the water heater for electric is much more expensive than a gas instantaneous system.
Right.
So the gas instantaneous system is, it's got a small box that's outside the house, and the water is heated up. I won't go through the whole thing, but it's got a small box, right? Whereas when you have like electric heating, you'd have to use a heat pump to have it approved through NATAs and BASICs, and that is a lot more than that instantaneous system. You're probably talking about a couple grand.
Right. And how does that work? How does that operate, basically?
I'm the expert, but apparently it's very similar to AC unit, like AC heating.
Yeah.
So it's not like the old school sort of method of electric heating. It used to be like a element, similar to like a cooktop sort of thing.
Yeah. Okay.
Like a sort of element that's warm, keeping the water warm, consistent.
Yeah.
It doesn't really work through that system anymore. Similar look, it's just like a big cylinder sort of thing that sits outside your home.
Yeah.
So for water heating, that's one of the things, and then the cooking side. Most people are trying to go for an induction cooker, like if they're going electric. Yeah. Okay. Cooking performance is a lot better. It's a lot faster. But I'm not sure. There's a lot of people that don't like it.
So what's happening in the world of Lander Homes at the moment? Are you you basically just clients are coming in and you're starting the design process with them and then getting them homes? Is there? I think you were talking to me about some new things you were doing as far as building.
Yeah, there's a few secret things.
Oh, okay. A few secret things.
I won't share on the podcast
Fair
yet.
enough.
Maybe
No,
next
right.
time,
I
or
love secret things.
maybe the time after.
Well, anyone who's keen to know the secret can
Yeah.
probably call you directly. So
Yeah. But yeah, so we have like the efficient builds, people that are looking
Yep.
to build the more cost effective, the more efficiently built homes. So we have those, but most of our clients are still those that are looking to build their own occupier, forever home sort of thing, custom home. They vary, everyone's dream home varies, and it kind of also varies with the location as well. But yeah, so most of our clients are coming to us to design and build that sort of thing. So business wise, still pretty much doing the same sort of thing.
It's a good model. What you have, where you sort of go with a budget, because I know a lot of people who build sort of house and land packages and stuff like that, where they looking around for a house and land package that's affordable. But your service is more tailored to those who sort of say, hey, here's my budget, and I want X, Y, Z, and you make it work. Like, so for instance, if I said to you, how much is it costing at the moment, the average cost for you to build one of your homes? Correct me if I'm wrong, but you probably couldn't tell me, because it just varies depending on what someone needs, right?
Yeah.
As opposed to sort of the house and land packages, which advertise on realestate.com how much the house and land package is. So it's real tailored to each individual customer, which I think is a value that not enough people sort of take advantage of, for sure.
Yeah. Even the specs, like say, for example, someone would say, I want to build like a high spec home. High spec is like, depending on which area you're in, like high spec can mean a very different thing,
Yeah, right.
I'm sure if you said high spec and you're building in Dubai, it might be a little bit different,
Yeah.
So like, it's just kind of like people will come through and they'll say, I want to build this size home and it's high spec, the block's flat and never is, and we kind of do need to do like a site assessment and do the whole process. But the best thing to do is do that initial pre-qualification check, finance check. They don't need complete finance approval, and I think you've mentioned that before. Hey, Keegan,
you don't need a full finance approval. Like I said, the finance only lasts 90 days. And often these projects will go beyond that. And when I say 90 days, we're talking about 90 days from the time you're approved. What needs to happen in those 90 days is that we need to have plans, and we need to have a fixed price contract. We take it to the lender, valuation's done, and then it's approved. So we can technically have that. If you've got a contract and plans, we can get that approved, and then the lender just won't pay progress payment until DA or CDC or plans are approved, right? And the time limit on that is a little bit longer. So you can have a finance formally approved, but construction usually needs to start within 6 to 12 months after that. So timing is really important for finance. You got to time it right. If you're in the early stages and you're sort of just figuring out your budget and stuff like this, you wouldn't jump into a pre-approval because it would probably be way too soon. But if you're close with your design and you're close to getting a contract, and that's just around the corner, maybe a few weeks away, then that's when you sort of start engaging lender and go, okay, contracts, we know what our budget is already because we've done the assessment, and we'll get the contracts. I'd probably say this. The process for finance is, number one, at whatever stage, you need to get your borrowing capacity. I think you mentioned that. It's the first thing. Get your borrowing capacity. If you don't have it, I wouldn't even start engaging a builder. Because it's, how long's a piece of string? What's your budget? And I spoke to a few people recently, and they haven't spoken to the broker, they haven't spoken to the bank, they have no idea what their budget, they've engaged the builder, and they've got they've got a really quirky set of circumstances. I won't go into detail. It's a real quirky set of circumstances, which I know when they told me it's going to be very difficult for them to find lenders to help them out with the construction based on their circumstances. And so it's important to I sort of had to say to them, hold up, just stop engaging the builder. Not stop engaging them, but stop the process, because we don't want the builder to get too far down the track of doing a whole bunch of work and you not have the income for it. Let's do a borrowing power, not an application, just a borrowing power. Figure out what you can actually borrow based on your circumstances. Find out if there's anything that needs to change in your financial circumstances before you engage a builder. And then from there, go ahead and engage a builder. Now, once you're engaging the builder, you're getting your designs, you roughly know what your budget is because you've had the conversation already. Then you get into the pre-approval stage where we make an application, and I recommend usually about a month away from contracts. Even though it lasts 90 days, you really don't want to do it 90 days before contracts, because if contracts get delayed, then you have to get an extension. So you want to get about no more than a month away from contracts. You put an application through for a pre-approval. Contracts are issued after a month with plans. They come through. We get that valued and formally approved, and then we let the builder know, and then the builder goes to get the CDC or the DA to start the construction. And then once that happens, after that, it's just a matter of getting an invoice for slab and approved plans and builder's insurance and stuff like that, and we can start the process. It all comes down to just knowing your budget, like you said.
Yeah.
I think one thing too is I've noticed that a lot of people, we specialize in self-employed applicants, and there's a couple of ways to assess self-employed applications. One is full doc, where we use tax returns and financial statements from your company. We look at how much you're paying yourself as a salary, and then we create and then we go to the lender and you do your borrowing capacity at your net business income plus your salary plus any add backs, right? That's going to get you the best rates. They're going to give you the major lenders, good rates, all the best of everything type of thing. If you don't have financials ready, or maybe your business hasn't lasted long enough, or you're not up to date with your tax returns or various other reasons, we can look at an option called LowDoc, which is using alternative methods for verification, such as business activity statements, a letter from the accountant. Usually the accountant knows how much income that person's earning, or sometimes we can just get business bank statements, and so just check the credits into the business account. And we can use that to get a borrowing capacity. Now, the problem with LowDoc, and that's a popular option if people don't have their tax returns and stuff, or it's a new business or something like that. But the problem with LowDoc is that there's only a few lenders that will actually construct doing LowDoc.
Okay.
And so if you are self-employed, that's even more of a reason to make sure you get your budget up front. Because a lot of people will just start going through the process. If you're self-employed, there's a lot of variables. The lenders look at self-employed applications differently. It doesn't matter if you're paying yourself a salary or this or that. You need to have that conversation with a broker about what your borrowing capacity is before you start constructing. Because we have to go down the LowDoc route, interest rate's going to be a little bit higher. We can still do it, but you would need to know exactly what your options are. Anyway, but that's from the sort of self-employed side of things. So, do you get a lot of people who do get through the process and their finance becomes a problem?
It's usually someone who's tried to do the design phase by themselves. So they'll go to an architect or a building designer, and then they'll contact us to tender on their project, get an estimate or a budget on how much things cost.
Yeah.
And I usually find out fairly quickly that they've missed that whole process. They've missed that whole step. Um, and like you said, like you mentioned earlier, the money thing can be a really emotional thing, and people get a bit uneasy about it. But I'd ask them, what is your budget for the build? And many times their budget is not close to how much they need. And then that's usually the first initial red flag. And then we'd still advise them to go through the finance process just to double check. But yeah, like we've had, I remember having somebody sent through these plans, curves throughout the whole home, a whole lot of cabinetry. It was a duplex. I won't share too much detail in case they're listening, but I felt really bad for them because when I reverse engineered their budget to the sort of home they were to build, it was almost like $1,300 per meter square. There is no one that can build that house for $1,300 per meter square, at least in Sydney. And even for myself, I'd end up losing even if I was to build that at cost. But that person has spent a lot of time. They were completely DA approved and everything. So that
that got that far.
So that's very common. They've got all the approvals. So for DA, they normally have hydraulic report completed, basics and NADAs, and the survey's already been completed, borehole report. So they've invested a fair amount of money in there, to have plans completed for a duplex as well, to that level. That's a fair amount of money.
Find out that they can't quite do it.
Out that they won't be able to do it. I mean, you're probably talking about them having to almost double their budget in order to build what they were hoping to build. So,
I do find that that's something that happens a lot. Maybe not. I'm not a builder, but I do have people come to me sort of in a bit of a panic sometimes and sort of say, okay, well, our budget's not enough. I don't know if I've had anyone that went that far through the process of, getting DA and all that, spending all that money. I'm curious to know what happened with those clients, but I won't have you tell me.
They couldn't go. They couldn't go ahead.
Go ahead.
And I don't think any builder would be able to build their home. Even if you were to remove all the cabinetry and everything, it was just it'd be super high risk.
You and me were chatting about it actually, and people, and I'm conscious of the time as well, but people get real cagey when you ask them about their budget. And I partially get it. You know what I mean? They don't want to tell the builder their budget, and the builder goes, great, I'm gonna make the most of this budget. My margin just doubled because these guys told me their budget. But that's not the case. Like that doesn't happen. Maybe it doesn't happen as often as they might think. And so the builder needs to know what the budget is, especially with custom homes. Like this is not a house and land package that's just here's the price. If you have a specific build, you're going to have to tell the builder your budget so that they can help you with that. Otherwise, you're going to have a scenario like this where they get through all the costs of DA and plans and designs to find out that they can't build it, and they've actually lost money in that circumstance. Whereas if they said to you, Rav, this is our budget, what are my options? We want to do a duplex. We want to, have a certain type of home. You could probably have a consultative process with them and tell them what it is. And I find the same thing for finance is when people, I call people up and I chat to them and say, hey, you're looking to build, do you have finance approved? And everyone sort of goes, I got it approved. And I take it with a grain of salt because I'm thinking, you're telling me that because you don't want it to interrupt your construction journey. You don't want it to interrupt your building journey. And we know that if you say I'm not approved, they feel like we're going to shut the doors on them and go, no, okay, get out of here. We don't want to speak to you if you're not approved. And so they sort of just go, yeah, I'm approved. Like, let's just keep going. Do you see that? Do you find that happens?
Yeah. Everyone's got finance approval. Yeah.
Everyone's got finance approval. And so you need to actually be open and honest and sort of say, look, I don't have finance approval. To be honest, I haven't even looked at it yet. We can go, great. That's not a problem. We're not going to stop the process. But it just means that there's an extra step that we need to take, which is to have a look at your finances and make sure that you can afford it. So that's really important with construction. But it's been an hour. I've kept you for an hour, so I won't take you for too much more, unless there's anything else you wanted to cover today.
No, I think that's just probably the main thing. People need to check their capacity. That's a necessary step. Regardless of who you're designing with, regardless of who you're building with, you need to have that pre-qualification finance check. Otherwise, you might be subject to a whole lot of loss in. Otherwise, you might be subject to a whole lot of just waste. You're just going to be wasting a whole
pain and suffering. Yeah, pretty much. Yeah, no, I appreciate it. Well, thanks, Rav, and hope to have you back on again in the future.
Awesome. Cheers. Thanks for having me, Keaton.
Thanks.
Thank you.